We have been consistent in our belief in the long-term outlook for lithium, with an expected market deficit emerging from the end of this decade and a double-digit growth rate until 2040. Lithium is one of the fastest growing markets today and is expected to reach an even greater scale in the coming decades. We have been saying this for many years, that we want to build a lithium business, but we wanted to build it at the right time and as competitively as possible, so we create maximum value to our shareholders. We have been patiently studying the sector for a long time, ever since, in fact, we discovered Yara 20 years ago, to decide the best way to enter the market and develop a lithium business of relevance and scale. Applying our disciplined capital allocation framework now is the right time to acquire a premium lithium business. Through this transaction, we are bringing Rio Tinto's scale, development capability, and financial strengths to an already very strong Arcadium portfolio. Arcadium brings leading technologies such as direct lithium extraction that it pioneered, which together with our investment in the technology creates a world leader in DLE. They have proven downstream capabilities, delivering the highest quality products. They also have deep commercial customer relationships. And Arcadium brings the world's largest lithium resource base from tier one assets, large, long life, low cost, and expandable. We have complementary geographical footprints and share rich experience operating in Argentina and in Quebec, Canada, where we plan to establish world-class lithium hubs benefiting from economies of scale and deep local knowledge. And we believe that inside Rio Tinto, we can improve and accelerate Arcadium's development pipeline with our project delivery capabilities while offering strong and stable financial backing, enabling us to plan for the long term to deliver the optimal growth pathway. This transaction gives us the platform to create the world's leading lithium business in the next few years. Rio Tinto already have one of the highest growth stories with copper. With Arcadium, we believe we are positioned to have the world's biggest growth story for lithium. Paul will now tell us more about the business.
Thanks, Jakob. So let me provide a quick reminder of who Arcadium is. We were formed from the merger of Allkem and Livent at the beginning of this year. This merger created a unique global vertically integrated lithium chemical producer with the widest offering of lithium chemical products. Our world-class resources and manufacturing network is backed by a broad technology portfolio with expertise in all major forms of lithium extraction and processing. In Argentina, Arcadium has a vast network of low-cost lithium brine operations with long resource lives, which are expected to remain operational for generations. And these operations are supported by downstream chemical processing plants across the globe, making Arcadium one of a handful of truly integrated producers of lithium chemicals. Additional brine resources are under development in Argentina, close to Rio Tinto's Rincon project, and hard rock mines are under development in Quebec, close to Rio's Canadian operations. And these assets will benefit from Rio's existing footprint. Our technological leadership in direct lithium extraction is also extremely attractive. It complements Rio Tinto's technology development at Rincon and its Bundoora Technical Development Facility in Australia.
Arcadium brings the #1 lithium resource base in the world. Rio Tinto helps unlock it. Arcadium has deep downstream and commercial experience. Rio Tinto has deep upstream and project development experience. Together, we have the foundation to create the leading lithium business. As you would expect, we continue to maintain our disciplined approach to capital allocation, which has led to our very robust capital structure and strong balance sheet, enabling us to undertake this transaction and fund this growth. This transaction will grow our earnings and therefore grow our dividends through the cycle, creating value for shareholders over time. Our dividend policy is unaffected, and we remain committed to honoring our current policy and practices. A few details on the transaction itself. We are acquiring 100% of Arcadium for a consideration of $5.85 per share to be paid in cash. The transaction has been unanimously approved by both companies' boards of directors. Given Arcadium's legal structure, the acquisition is to be implemented via a Jersey scheme of arrangement and is subject to both Arcadium's shareholders' vote and customary regulatory approvals. We expect the transaction to complete in the middle of 2025, subject to the receipt of regulatory approval. It will be funded from existing liquidity, and the availability of Rio Tinto capital from closing will allow for the acceleration of project delivery. What is really key for me, and maybe Paul wants to comment on this as well, is how can we get the project schedule back to the accelerated path at the time of the merger of Allkem and Livent, because lately, of course, Arcadium have had to preserve cash and therefore not accelerate it as fast?
Sure. Yeah, like I think there's clearly within Arcadium 2 projects that we've elected to move more slowly. And if we were to accelerate those projects, it brings about another 50,000 tons of lithium product in the form of spodumene or carbonate online 2 years quicker than was in our plans on Investor Day. We also have additional expansions, which I'm sure you'll recall from our Wave 2 that can also be brought forward into Wave 1. And so we clearly are extremely keen to find ways to accelerate the projects that within Rio we can, that as a standalone company we cannot, but within Rio we will be able to accelerate them. And all other things being equal, of course, that will significantly enhance profitability over the next 5 years.
I'm actually very curious to hear Paul's view on this, but I would say one thing that is very important. That's the mantra of Rio Tinto through decades, is we believe in the cost curve. And what we believe is we're bringing things at the low end to the market of the cost curve. And then there might be others who are bringing more expensive in, and it might be difficult for them, but we feel very comfortable with the projects we have looked at.
Sure. But I think you've got to kind of get some sense of scale to the question. Lithium demand globally this year is probably about 1.3, 1.5 million tons. By the end of the decade, it's going to be 3.5 million tons. The expansion needed to meet that cannot all be done from low-cost production. And so there has to be high-cost assets being added to the market. I know it's easy to think that accelerating our projects is in somehow or some way going to add more supply. This market is going to be undersupplied by the end of the decade, particularly when prices stay where they are today. And the cost curve, we believe, is only going to get steeper. It's incredibly difficult to bring low-cost resources on from scratch. We're fortunate that we're not doing it from scratch. We're up and running in 3 different resources and very soon 4 different resources. So the advantage we have to bring on low cost, while the rest of the industry is going to have to bring on high cost, we feel very confident there's plenty of scope for more rapid and larger expansion of low-cost resources like ours.
If you want to scale that up in Latin America, I mean, you're going to destroy the Andes if there's going to be ponds all over it. The DLE technology is a way of reducing your nature footprint, and the technology is developing all the time, and it is actually the solution to provide the lithium that the world needs. And don't forget that it was really Arcadium that started it many years ago. You're the pioneers of it, and we're the fast follower. And bringing our research people together with your people, we already had a first little event last week. There's a lot ahead of us, and we haven't explored it fully yet. There's the right technology, but there's also a tremendous technology development journey ahead of us.
Yeah, just like I think it's important to understand that extracting lithium carbonate from brine is not a single-step process. Easily 20, 25 steps in that process, and DLE fits into a flow sheet, into a process. So it's really important to have the know-how, how the entire process works, and how the different DLEs interact with specific brines, specific environmental conditions. The key to unlocking initial implementation of DLE tends to be that know-how plus infrastructure. But once you have unlocked it, it's incredibly quickly replicable. And so it allows you to expand much more quickly. And so when you think about synergies, I think this opportunity to bring our know-how and our DLE with the, if you will, the unlocking potential of the ability to invest more quickly in the infrastructure, it just makes a massive difference to the ability to bring resources on. And most importantly, it's not just bringing them on, it's the ability to then just, we call it copy-paste, just copy-paste, copy-paste, and you can expand as quickly as you need to once you have that flow sheet running and once you have the infrastructure in place.